Subscribe the channel for more informative videos. Pakistan's currency outlook: how the US dollar exchange rate impacts the economy. Exchange rates are an important indicator of a country's economic health. In Pakistan, the US dollar exchange rate is closely watched by policymakers, investors, and the public alike. This is because Pakistan is heavily reliant on imports and exports, which means that changes in the exchange rate can have a significant impact on the country's trade balance, inflation, and overall economic growth. In this article, we will explore the factors that affect the US dollar to Pakistan exchange rate and the implications of these changes on the Pakistani economy. Factors affecting the US dollar to Pakistan exchange rate. There are several factors that affect the US dollar to Pakistan exchange rate. There are several factors that affect the US dollar to Pakistan exchange rate. These include: 1. International trade. Pakistan is a net importer of goods and services, which means that it has to pay for its imports in foreign currency, usually in US dollars. Therefore, any changes in the global demand and supply of goods and services can impact the exchange rate. For example, if Pakistan increases its imports from the US, it will need more US dollars, which will increase the demand for US dollars and hence the exchange rate. 2. Inflation. Inflation is the rate at which the general level of prices for goods and services is increasing. Inflation erodes the purchasing power of a currency, making it less valuable. Therefore, high inflation in Pakistan can cause the exchange rate to depreciate, as investors will demand higher returns to compensate for the loss of purchasing power. 3. Interest rates. Interest rates are the cost of borrowing money. Higher interest rates attract foreign investors who seek higher returns on their investments. Therefore, an increase in interest rates in Pakistan can cause the exchange rate to appreciate, as foreign investors will demand more Pakistani rupees to invest in the country. 4. Political stability. Political stability is essential for economic growth, as it creates a favorable environment for businesses to operate. A stable political environment attracts foreign investment and helps to maintain a steady exchange rate. Implications of changes in the US dollar to Pakistan exchange rate. Changes in the US dollar to Pakistan exchange rate can have several consequences on the Pakistani economy. These include: 1. Trade balance. Changes in the exchange rate can affect the balance of trade between Pakistan and other countries. If the exchange rate depreciates, imports become more expensive, which can reduce the demand for foreign goods and services. However, this can also make exports cheaper and more competitive, which can increase the demand for Pakistani goods and services. 2. Inflation. Changes in the exchange rate can also impact inflation in Pakistan. If the exchange rate depreciates, imported goods become more expensive, which can lead to inflation. This can reduce the purchasing power of the Pakistani rupee and increase the cost of living for consumers. 3. Foreign investment. Changes in the exchange rate can also impact foreign investment in Pakistan. If the exchange rate depreciates, foreign investors may be less likely to invest in the country, as they will receive fewer returns on their investments. 4. Remittances. Remittances are an important source of foreign exchange for Pakistan. Changes in the exchange rate can impact the value of remittances sent by Pakistani expatriates. If the exchange rate depreciates, the value of remittances will decrease, which can reduce the amount of foreign exchange entering the country. Conclusion. In conclusion, the US dollar to Pakistan exchange rate is an essential indicator of Pakistan's economic health. The exchange rate is influenced by several factors, including international trade, inflation, interest rates, and political stability. Changes in the exchange rate can have several implications for the Pakistani economy, including the trade balance, inflation, foreign investment, and remittances. Therefore, policymakers and investors must closely monitor the exchange rate and take appropriate measures to maintain a stable and sustainable exchange rate.